This is the Friday, March 11th, 2016 version of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Mike.
Now, on the program, we did not have a chance to talk about the cotton market, but you mentioned the delays expected in the Delta with this deluge of water they've been getting. What do you anticipate with cotton here going forward?
Well, I think cotton has found a base in value, just like corn, beans, and wheat have. And so here's another market, ag market, that's trying to, and it's an oil seed as well. And there's such good demand for oil seeds right now that I see cotton as holding and maybe inching its way a little bit higher. Part of it being driven by the concern over the wet weather, which probably won't change a whole lot. And so as we get towards the end of the month and we start to do some cooling, and then you have that wetness along with it, not going to be helpful to get stuff done.
Okay. Now, with this wetness down there, are you expecting many acres of corn or beans to be lost as we look at the south?
Well, I think that the concern is late plantings, of course, for soybeans and corn, and a late start anyway. But, you know, some of your bears will say, well, yeah, but we've got such big supplies that we don't have to worry about it. It's going to mute that. I don't know about that.
Okay.
The markets are just too heavily short, you know, be it whether it's cotton, corn, wheat, and even beans. I think that the market will respond to that with some more short covering, and especially so because cottonseed is an oil seed, and bean oil is leading the bean market. And of course, granted, when you have a bean market led by bean oil, the rallies don't go as far as they would if it was with soy meal. But still, that's the leader, and I think it helps move along with palm oil. Palm oil closed up sharply for the week. I think that helps along all these oil seeds just kind of sort of gravitate a little stronger.
Okay. It at least takes some of the sting out of these lows that we've
I think so.
been putting in.
Yes, I certainly think so.
Okay. Now, do you think the lows are in here? These double bottoms we're putting in, are these going to be the year lows in your opinion?
I'm kind of wondering if they really aren't.
Okay.
You know, with some markets having made, some of your corn contracts made lower lows on those contracts, but for the year we didn't make new lows. And that usually, there's only been twice, for example, that corn in a year of a 6 made it lower lows from the year before. And one of those was in the month of January, which this year we did on those individual contracts take out last year's low. But all in all, the bottom is still in for a lead contract. And I still kind of think, even though there's a boatload of corn to come out of the elevator, you know, elevators, farmers' bins, a lot of that will probably start to come out in June. Mm-hmm. And so I think when we look at the market here, demand seems to be pretty good. What I see for the grain market, especially like for corn, for example, and beans too, but for corn especially, our foreign production deficit is very big this year. I think it's the second greatest that we've had in a long time, very long time. And that tells me, does it mean prices have to go higher? No, they don't. But what it tells me is that when you have South American production keyed into those foreign production deficits, and we're not involved in it, it's telling us how badly the rest of the world needs us, and they have the second greatest need on corn. What that tells me is if we run into a weather issue, that market's going to go higher.
Right.
In my opinion.
Okay. And now that kind of leads us right into our first Twitter question. This is from Jared on Twitter at Jaeger Jared. He's asking, where do you think we are in this ag downturn? As a commodity class, he wonders, are we just getting started or are we coming through on the other side?
Well, I think you're kind of in the process of, you know, for corn, I still believe that the low was made in 2014. And then last year was a year of transition. And this year, it needs a nudge. We need some help. But, you know, at the latest, it might be 2017, but I don't think so. I think we're starting to get that ebb and flow going. It's very slow, dull. It's almost like an old-fashioned market, of which it can lull you to sleep, and those are the markets that usually catch you off guard. It's also got a story that everybody believes isn't going anywhere, and that there could even be a 2 in front of corn. People believe that. I think that's that kind of environment that draws your corn out underneath you and gets you to finally part with it because bills are going up and you need to, you know, bankers are not as easy to deal with as they have been. So they're having to push you and nudge you And therefore, that's when your corn gets away from you. And let's face it, it's not at a profitable price.
Right.
So we remain that you continue to retain ownership via options, can do it very cheaply. There's all sorts of strategies out there that you can use. And then we look at it because I think between now, as short as the funds are, between now and after the corn is planted, the funds are somewhere in here are going to say, you know, we need to put a little weather premium in. There's none here. And they're going to start covering these shorts to get away so that they can be ready, so that that market is propped up once again in case the weather is ideal, that they can go back short for a breakdown into fall, which a year of a six a lot of times has.
Okay.
So, and what's interesting is the 2 years that we did not, that we made a lower low on a lead contract, what was interesting in those years was one was in April and one was in May. Both of those years saw the market move higher the whole last half of the year into the new year.
Okay.
So there is a potential here, but a year of a six usually, well, let's put it this way, in the past has always given you an opportunity.
All right. Okay. Well, now that's interesting. So we've got a couple of questions here from our good friend Phil up in Ontario, Canada. And you talked about the stocks currently waiting at the ports in Brazil, and he's wondering, or he's noting that Brazil's economy is contracting. They have been shrinking. We saw the real go through a terrible nosedive last year. Economic growth rates are negative. Will this eventually decrease their ag production? In Brazil over the next year, 2 years, do you anticipate them to?
It depends on what the dollar does, because at the moment it has kept them very competitive. And you have a group of farmers there that do, especially if they're very large sized, they sell in dollars and they buy their inputs in dollars. Those guys are getting squeezed. And then you've got the others that sell in dollars, but they buy their inputs in reals. Those guys are not being squeezed. And prices down there have been quite high compared to here. So I think that the dollar is a very important item this year. U.S. weather is going to be a very critical thing, but it's the political climate down in Brazil is very tenuous at this time, and President Dilma Rousseff, it's yet to be seen whether she actually bites the same bullet that the previous Dilma da Silva or whatever.
Yeah, Lula da Silva. Yep.
And he's been arrested and on corruption charges, and now they're looking at her. I think that that if that comes to fruition, that could cause some dysfunction in the country, and maybe exports don't run as smooth as they would like them to. And there's a trucker strike that's going to go off here as of today. Should be going off, and so we'll see how that goes. But it just seems to me like it's a little kettle of brewing issues down in Brazil, but certainly a huge crop. The production numbers keep inching higher now again, and in the meantime, they have more port space to be able to do things with, so we'll see what happens.
Is this trucker strike, if it lasts, let's say these things are usually a week or 2 weeks, if it lasts that long, would we see a nice bounce continue here in bean prices?
Oh, I think so, because bean basis at the Gulf is pretty strong. Actually, for July, I think it's 52 over the board, and for June, it's like 48 over the board. And then current, I want to say, don't hold me to this, I want to say it's like 42 over. So there's good demand for beans right now. A couple of things may be causing that. One, the concern about Brazil's political situation. Two, the other thing is the flooding in Louisiana and what have you, causing concern about, not being able to get ships going, loaded, and out the door as fast. That could be causing concern. And knowing that the river is opened up earlier than normal.
Sure. So we could be bringing more beans down if the river stays open when we get down into Louisiana.
Exactly.
Where this flooding is taking place. And now, final thought, Phil had another question here. Looking at the U.S. dollar, you mentioned that we could see it run back up and test those highs. He's asking, would a U.S. dollar surge in 2016 effectively put the brakes on any potential ag commodity rally?
I don't think so. I think because the whole process, if you look at a quarterly chart on the dollar, we've been congesting for quite a few quarters. And the indicators I use are all negative. They've all kind of started to turn negative. And that tells me that this market, the only reason I say there could be one surge here to take out last year's high is because what are you going to do in new time frames? Take out last year's high or last year's low? Or the last present time frame, what are you going to do? And we closed the year higher. So, I would say you can still maybe come tag that high. Is it with maybe in June when the Brexit vote is? It might happen on that. But do I think it lasts long? No, I think it doesn't live very long, and then the market just fades back away. I see this year giving us some opportunity where we become a little more competitive. And like corn, the foreign production deficit, mind you, on beans is also about third largest or greatest by the foreign buyer. And that's including South American record production.
Okay.
So I think that's very important.
It is. That's something that a lot of the bear story has missed, that
I think so.
Foreign deficit.
Not to mention India, a huge country that's growing, big demand for soybean
moving
oil.
into the middle class.
Yeah.
You bet. Well, Sue Martin, thanks so much for taking the time for joining us this week.
Thank you.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do that, and we will get expert analysis right to you. Thanks for watching, and have a great week.